Good afternoon, everyone, and welcome to PPP, the forgiveness portion. This is really exciting stuff. I'm happy you guys are all here today. We'll get right into it. My name is Andrea Diaz. I'm a partner at SKC & Co. CPAs, and we are the Entrepreneurs Accounting firm. We have been working with all of our clients and assisting them in applying for the loan, understanding it, and now we're in the phase of calculating the forgiveness and understanding all that has to be done with this loan over the next 8 weeks. So we will get right into it. I'm going to go through this presentation fairly quickly because I do want to leave time for questions. Some of this may be repetitive of what you've already seen and what you already know. Some of it may be new. So, but I am taking questions at the end. So if there's anything that's not covered in the presentation, please feel free to ask. We're going to go over these 3 topics today. The first one are eligible costs. The second is a step-by-step process of calculating the forgiveness. And I say this is as of May 1st, 2020, which is Friday. And that's because it only incorporates guidance that we have to date. We are anticipating and waiting on additional guidance, which we'll talk about later. So this is only through the guidance that we have through Friday. And then the last thing will be some additional guidance and resources to stay current. So being able to give you guys some links to websites and resources so that you can stay on top of anything new that comes out. So with that being said, we'll jump right into it. Eligible costs. As you know, if you are on this call, you likely have already received or are anticipating receiving a PPP loan, which is the Paycheck Protection Program loan. And you've gone through the process of knowing that the Paycheck Protection Loan was calculated using payroll costs, 2.5 times your average monthly payroll costs. However, your eligible costs for the funds are more than just payroll. It does start with payroll costs, which are defined as compensation to employees, including salary, wages, commissions, or similar compensation, cash tips, payment for leave, separation, healthcare coverage, which are the insurance premiums, and retirement, employer retirement contributions, as well as payment of state and local taxes assessed on the compensation of employees. I continuously get the question, are the employer portion of FICA taxes allowed? Are they eligible costs for forgiveness? And they are not. So just something to keep in mind. Other approved uses of your PPP funds include mortgage interest on real or personal property, and the mortgages need to be in effect prior to February 15th of 2020. Rent payments under a lease agreement for agreements in effect prior to February 15th of 2020. And utilities. I've included the definition of utilities because there seems to be a lot of questions around what constitutes utility payments. And per the AICPA.org website, and under frequently asked questions of utilities, and I'll provide the AICPA.org website at the end for additional guidance as a resource. It includes payments for electricity, gas, water, transportation, telephone, or internet access. And all of these services must have been established prior to February 15th of 2020. It does say other common utilities such as garbage collection or security monitoring may also be classified as a utility, but the business should confirm with the lending institution. So keep in mind, when you applied for this loan, you applied through your lender. And your lender will be your bank will be the same company that you will apply for forgiveness. So you don't apply directly to the SBA for forgiveness, you will complete an application directly with your lender. And just as the lender approved your loan prior to sending it to the SBA for approval, your lender will also approve your forgiveness or require some documentation before sending it to the SBA for approval. So we're waiting on additional guidance to confirm if the SBA will specifically state what utilities mean and if they're going to include things such as garbage collection or security monitoring. But until then, these are types of expenses that you would be paying consistently anyway, and the lenders may have specific guidelines that they're utilizing. Okay, so the next portion of our program is going into the step-by-step process on calculating the math calculation on forgiveness. And step one is to track the total eligible costs incurred and paid during the 8-week period following the loan funding. So your 8-week period starts on the day you receive the funds in your bank account. From that day, 8 weeks later, it's the costs that are paid during that time. So if you receive funds on a Monday and your payroll was the previous Friday, you ran a payroll that previous Friday, those funds are not included. It only includes funds paid during that 8-week time period. So the first thing that you want to do is track, and I'm going to actually make this presentation view just so that everybody can see it a little bigger. The first thing that the first step is to track eligible costs, employee payroll costs. We've created a spreadsheet that we use with our clients in calculating the forgiveness. It's fairly straightforward, but we start with each of the employees that we have. We put in how much their pay is each pay period. Now you may get paid every week, so then you would have 8 pay periods. You may get paid bi-monthly, under which you may only have 3 pay periods during this 8-week time frame. You may get paid bi-weekly, so you may have 4 pay periods during this time frame. So you should understand how many pay periods you have in your 8-week period so that you can accurately calculate how many pay periods, how much will be your total wages in this 8-week time frame. So if John Smith and Jane Doe each were paid $2,500 per pay period, and there are 4 payrolls in the 8-week time frame, and there is also some health insurance and retirement contributions and employer state taxes, we add this, or I'm sorry, the health insurance, retirement contributions, employer state taxes aren't added to their total wages, but they are separately stated as eligible costs. So you want to start to frame out how much you're going to be spending and what the total wages are and your total costs for this 8-week time period. Now, our particular spreadsheet, as you can see when it on the right-hand side where it says pay period 1, pay period 2, pay period 3, pay period 4, above, the row above that says actual, projected, projected, projected. And the reason why is because you want to make sure that as you're going through your 8-week period, that you're putting in actual costs for that particular period. So let's use an example. Let's say you get paid on the 15th and the 30th, or your payroll runs twice a month. There was a payroll run on April 15th. That one's not included. You got paid after. The next payroll would be April 30th. So April 30th has passed. You would change your pay period 1 to the actual costs that were paid. So if you have hourly employees and you anticipated that they would work 40 hours for the 2 weeks and they would get paid $2,500 each, and potentially they worked a little more, a little under, you want to include that in your actual so that you're keeping track of how much you're actually paying over this 8-week time period. You don't want to get to the end, you don't want to project and say, I anticipate spending a total of $20,000 in the 8 weeks, I'm going to have loan forgiveness, and then you come short. So you want to keep track during the course of the 8 weeks on how much you're spending on payroll. Step 2 would be to calculate the payroll costs for forgiveness floor. So in this scenario, we're assuming that your loan is $25,000. 75% must be used on payroll costs. So 75% of your $25,000 is $18,750. The remaining portion, $6,250, is eligible for rent, utilities, and mortgage interest. So if your funding date was on 4/24/2020, April 24th, your 8 weeks from funding would be June 19th of 2020. That's considered your covered period. The time in between April 24th and June 19th. If you have 4 pay periods during this time, and the wages from which we calculated on the first page of $20,090 plus the health insurance, retirement contributions, and payroll costs, I'm sorry, employer state payroll taxes, your total payroll cost for the 8-week period would be $20,790. Now, you want to compare your total payroll cost to the 75% requirement. And in this example, you meet the 75% requirement. If you do not meet the 75% requirement, there are two different current schools of thought. One, and we are waiting on additional guidance. One is that whatever is below the 75%, you have to pay back. Some accountants and attorneys are under the school of thought that if you do not meet the 75% requirement, that you may have to pay the entire loan back. We are waiting on additional guidance. We don't know that's true. We are currently encouraging all of our clients and anybody that we advise to make sure that you know how much your floor is and that you are at least meeting the 75% requirement. So you want to calculate your payroll floor to make sure that you're meeting your 75% requirement. So step 3, there are two reasons why your forgiveness may be reduced. So let's just go back 1 second. If you calculate your 75% and you have more than 75% of your payroll, your payroll costs are more than 75% of your total loan, this may seem, I'm good to go, I'm in the green, everything is okay, I will be 100% forgiven for my payroll costs, and that is not true. There are two additional requirements. One is the number of full-time employees. So the first, you want to calculate any decrease in your full-time employees, that's what FTE stands for, from your 8-week covered period. The guidance states, and the CARES Act states, that it will compare the employees during your 8-week time period to one of two options, and you can choose, it's the employer's choice. The first option is to compare it to your full-time employees between February 15th of 2019 and June 30th of 2019. The second option is to compare your full-time employees to January 1st of 2020 to February 29th of 2020. So in this example, there were 2 employees during the first time period, there were 3 full-time employees during the second time period, and during your 8-week covered period, there are 2 employees. You are allowed to choose between the two. So in this instance, we would choose to compare it to the time period that had less employees, since we only have 2 employees during the 8-week time period. So all of our costs spent on payroll will be forgiven in this instance. Now, had both the first option and the second option been a 3, right? So let's say during your option 1 and option 2 period, you had 3 full-time employees, and during the 8-week period, you had 2. Then your payroll cost forgiveness would be reduced by 33%. So what does that look like? Let's just go back a page. Here are your total payroll costs for your 8 weeks, $20,790. Had you not met, or had both options been, option 1 period and option 2 been 3 full-time employees, then your $20,000 of payroll costs would be reduced by 33%. That amount would not be forgiven. So you would only be forgiven of 67 roughly % of your payroll costs that you spent. So this is an important factor in calculating how much is actually forgiven. Step 4. Would be to calculate any reduction in payroll that is over 25%, or I'm sorry, it should be less than 25% of the prior quarter. So what does this mean? For any employee who did not receive during any single pay period during 2019 wages or salary of more than $100,000, So if you have employees who make less than $100,000, they are included in this calculation. And the calculation is during this pay period, during this 8-week covered period, was more than did they earn more than 25% less than they did in the prior full quarter? So the previous full quarter, if you're funded on April 24th of 2020, the previous full quarter is Q1 of 2020, January through March. So let's go through this example for John Smith. John Smith, during the 8-week time period, will make $9,990. He's below the $100,000 max in the next column. But in Q1 of 2020, he made $23,000. So if we were to take $23,000, which is a 13-week period, and divide that by 13, multiply it by 8, so it compares equally to an 8-week time period, the 8-week comparison period amount would be $14,153.85. This is so he's earning, during the 8-week time period, he's earning $9,990. Compared to Q1 for the 8-week period would be $14,154. So he's 29% less than what he earned. So there is a portion of what he received that will not be forgiven, $625.38. Now I know there may be some questions around this of what exact, comparing how do you either take what they've earned over the 8-week time period and annualize that so that you get to a full quarter, or take the prior full quarter and break it down into 8-week comparison. It does turn into the same percentage, but you do have to calculate to make sure that if you're bringing your employees back, and if you don't bring all of them back, let's say you only bring a few of them back, then you do have to ensure that during your 8-week covered period, they're earning the same amount that they would have, or not more than 25% less than they did in Q1 of 2020. Step 5, if you calculate your adjustment because of any FTEs, the step 3 and 4 that we went through, there's a restore criteria that says if you bring your employees back by June 30th and you restore their salary and wages, so you restore all of your employees and all of your salary and wages by June 30th, then you necessarily don't have to calculate the forgiveness portion based off of FTEs and 25% less. So if all of your employees are back, then you will not have to, you can essentially ignore steps 3 and 4. And all of this is guidance directly from the AICPA. On the website that I will provide in the additional resources, there's an actual PDF that has all of these steps and gives additional guidance for them. So I encourage you to go to the website and look at have the document there if you're going to create your own spreadsheet, and also for updates. Step 6 is to calculate your non-payroll related costs paid, so your utilities, your rent, and your mortgage interest. Now keep in mind, since you must use 75% on payroll costs, that leaves 25% for your non-payroll related costs. However, the forgiveness portion or your non-payroll related costs may not be more than 25% of your total forgivable loan. So if your loan is $25,000 and you're only entitled to $20,000 of forgiveness because potentially you were reduced because of FTEs, or your loan forgiveness was reduced because of wages that were less than 25%. If your total loan forgiveness, utilizing everything, your payroll costs and your non-payroll related costs is $20,000, you're only allowed to utilize 75% of that $20,000 for non-payroll related costs. So that would be $5,000. I encourage everybody to keep create a calculator. The AICPA is coming out with a forgiveness calculator. There are many law firms and accountants that have their calculators online that you can utilize as a resource to create. So once you put all of this information into the calculators, they will tell you if you are limited in your non-payroll related costs or if you have any other add backs. Additional points to consider while you're going through your calculation and creating your spreadsheet: independent contractors paid by the company are not included in your payroll costs. Many national payroll providers such as ADP and Paychex have developed PPP compliant reports to track both payroll and benefits. So I encourage you to reach out to your payroll companies and ask if they have specific reports that you can run on a pay period basis so that you can track it. It'll assist you in tracking how much you've paid during your covered period. We encourage a separate PPP bank account to assist in tracking your costs. Self-employed individuals. So if you are a Schedule C individual and you've received PPP funds, you would calculate your employees similar to what the process we just went through. However, for self-employed individuals, your compensation is limited to $850. It's limited to a calculation of your net profit from 2019 form Schedule C. So if you've not filed your tax return yet, and you are a Schedule C, or at least have a draft of your 2019, what you are entitled to receive during this 8-week covered period is limited to what was reported on your Schedule C for 2019. Rent and lease agreements and utility service agreements must be in place by February 15th of 2020. Expenses paid with forgivable loans. This is a big one, and one that I haven't heard many folks talk about yet, but expenses paid with forgivable loans are not tax deductible. IRS specifically came out with Notice 2020-32, which states that if you pay payroll costs and non-payroll related costs and the loan is forgiven, those costs that were paid are not deductible for tax purposes for 2020. So just something to keep in mind. Benefits for owners such as health insurance are not eligible costs for forgiveness. And professional employer organization PEO services are eligible for payroll costs. So if you utilize a PEO service for your payroll costs, they are eligible for forgiveness in this calculation. Now, here are some additional resources. As I mentioned, the AICPA.org website, and I will send this information to the chamber, and then they can circulate to all of the registrants, these various websites. But the AICPA has some, like as I mentioned, has the frequently asked questions. They have the step-by-step process on how to calculate loan forgiveness. They will have a calculator. It says right now it's to come. And they also have a list of Coronavirus Resource Center completely. The Treasury website, also the SBA constantly releases guidance, and all of the guidance is on their website. And there's also frequently asked questions. So as questions come in, they update their frequently asked questions, and their website actually shows the last time that it was updated. We are certainly waiting on additional guidance. And this presentation specifically omits discussions on forgiveness as it relates to eligible borrowers. So as I'm sure most of you have been hearing, the eligible borrower, there are two components to forgiveness. One, which is the mathematical calculation, which is what we just went through, and the other is qualification for forgiveness. So are you entitled to receive the loan? And if you're not entitled to receive the loan, of course, then you're not entitled to forgiveness of the loan. So those are some additional resources. So now I will open it up for some Q&A, see if there are any questions.
All right, great. Thank you so much for this information. I think this is fantastic information to get out to our businesses here in Morris County and the surrounding area. So again, thank you so much for presenting this. While we wait for some questions to roll in via the chat, I just want to let everyone know what's coming up in the chamber. This afternoon at 2 o'clock, we have Senators Sweeney and Oraho talk about their plans to reopen Morris County in New Jersey. They want to discuss New Jersey's plan for your business's recovery. So please join us at 2 o'clock for that. There will be a Q&A portion of it. So we'd really appreciate you coming out for that. And the next noontime webinar is going to be this upcoming Wednesday at 12 o'clock, 45-minute full body stretch. So that should also be great. Let's see. And let's see if we have any questions. Can you see the questions, or do you want me to say them out loud?
I can, yeah, let's see. Oh, okay, great. So I'm going to just start at the top and see if there are any that came in. Do you prorate salaries payroll based on the 4/24 date, or do you take actual payroll numbers from 4/30 if you're paid semi-monthly? So this is a great question. This is a question that comes in quite often. We are currently advising that you take the full payroll from 4/30. We are waiting on additional guidance to see if it requires prorating. As we currently calculate, we are calculating based on the entire pay of 4/30 if you're paid semi-monthly. Again, additional guidance may be released that states that it needs to be prorated, but from our current understanding, you would take the entire payroll period as of 4/30. Payroll checks, Paychecks also has a loan calculator or on it. Yes, a lot of payroll providers are utilizing calculators. And like I said, AICPA is coming out with their calculator, which I'm encouraged that they're taking longer than most, because I'm hoping they're really going to get it right and nail it down. So we're anxiously awaiting the AICPA calculator, but there are many other accounting firms, attorneys, and payroll providers that are providing calculators. For clergy housing paid, for clergy housing paid housing, is it eligible? So there was just a frequently asked question that came out about housing stipends and if they were considered eligible costs on the frequently asked questions under the SBA. It actually just came out a few days ago, business days ago, so maybe Thursday or Friday of last week. And it said yes, that housing stipends are included as eligible costs. I'm unsure if there's a difference between a housing stipend for clergy versus a housing stipend for an employee, but I can certainly check and get back to you, or at least send the question back out to Kaylee. Okay, let's see. Do two part-time employees equal one FTE for purposes of the loan? So FTE is defined as an individual working more than 30 hours. So if you have two part-time employees who each work 5 hours a week, then they would not be considered one full-time employee. We've actually been utilizing the calculator, and I can send the calculator to everybody. There's a calculator on the government website that was actually utilized for health insurance rationale, and you can add how many part-time employees you have and how many hours per week they work, and it will calculate how many full-time employees you have for purposes of PPP. So I will send that calculator website out to everyone so you can calculate exactly, if you have part-time employees, how to calculate that. You mentioned that employer state payroll tax can be included. What about SUI and SDI? Any other payroll taxes that can be deducted? I believe it's only SUI and SDI. For state, I don't think there's any other employer state payroll tax for New Jersey, I should say, and clarify. So yes, I do believe the SUI and disability for payroll taxes for New Jersey are included. Let's see if we have any other questions here. For self-employed, if you don't normally take a salary, do you take payroll taxes for the 8 weeks? You do not. For a self-employed individual, well, keep in mind, for all individuals, the employer portion of payroll taxes, the federal employer portion of payroll taxes are not included. So you're not going to include those as part of your eligible cost for your employees, and you're not going to include them as part of eligible cost for the self-employed individual. How can we review this recording after? Kaylee, I believe that's
got this one. Yep, I was just about to post it in chat, but we have a YouTube channel. I'm going to drop a link in the chat, and there's also on our website a video library on morrischamber.org. After this is recorded, we edit it. It takes usually about a week or two, and then we post all of the recordings on that YouTube page and on our website's video library. So I'm going to drop that in chat in just a moment.
Okay, another question came in regards to a 1099 contractor. And if the company pays a private contractor for services, is it eligible? It is not eligible payroll costs. Payments to 1099 contractors are not eligible payroll costs for purposes of PPP loan forgiveness. Let's see. I don't know if Lauren has a question. Let's see. If you take a draw, do we just continue to? So, okay, so yes. So if you are a Schedule C, self-employed individual, then you are entitled to take a draw equal to your 2019 net income on your Schedule C divided by 52 times 8. So if you take your total net income for 2019 and say, expect that that's 52 weeks of payroll for yourself or 52 weeks of draw for yourself, then you times your, divide it by 52 and multiply it by 8. That's the calculation for self-employed individuals. If you take a draw as a partner in a partnership, then your max is, and of course, all of this is maxed at $100,000. So employees are maxed at $100,000, self-employed individuals are maxed at $100,000, partners in a partnership, owners, everybody's maxed at $100,000, of course. Same process with the PPP loan application, which I shouldn't say it exactly because as PPP loan application, we utilized $100,000, a monthly $100,000 to equal $16,666. Or I'm sorry, $8,333 per month. So for 2.5 months, it was $8,333. We anticipated that would be the max for the 8-week time period, but the max for the 8-week time period for $100,000 annual is $15,385. So if you take if your Schedule C was more than $100,000, you're still maxed at $100,000. Same with employees. If you pay them more than $100,000, they're maxed at $100,000. And if you are a partner in a partnership and you take draw, then you're maxed at box 14A, which is your self-employed income. Of course, say 8 weeks, not more than $100,000. Due to COVID, I've not taken payroll for myself since 2/28. So applying for PPP, there were 2 pay periods of 0 that were calculated. Once the funds are deposited later this week, if I take 2 months of payroll along with my part-time employee, will it be significantly greater than 75% of the loan amount? And is this okay? So keep in mind that you're limited to a max of $100,000 in this 8-week time period. So that means if you pay any individual, including yourself, you cannot receive, and any individual cannot receive, or you will not get credit for loan forgiveness purposes. They can receive additional funds, but you won't get credit for loan forgiveness purposes of more than $15,384 $384.62. So rounded $15,385. So if you're making up your prior payrolls and you end up over that $15,385 number in the 8-week time period, you're only going to, it's only going to limit you to $15,385. So if you take 2 months of payroll, and it all depends on how much of your payroll, how much your loan is, and how much your payroll is for your part-time employees, to see if you'll get to the 75%. And I encourage you to create a spreadsheet to see if you get there, or utilize one of the spreadsheets and put all of the information in to see if you get to that 75% floor. But you can, it is paid payroll that is paid during this time period. So if you are not paying yourself and you were included in the loan amount originally, then I would suggest to start paying yourself. What triggers the start of the 8 weeks? The date of funding? Yes, the date that your PPP loan amount hits your bank account. And like I've said before, we do encourage segregation, a separate bank account to segregate the use of your PPP funding. We encourage you not to commingle funds. It'll just be easier to prove where you've spent the money in the forgiveness process. Okay, follow up to the other question, if it will be greater than 75%. If you're more than, if the question is if you're allowed to spend more than 75% on payroll, the answer is yes. So let's say if you are going to spend 85% on payroll and only 15% on non-payroll related costs, that is allowed. You can spend 100%. Keep in mind, the name of this program is the Paycheck Protection Program. So it was the intended use is for payroll. They are allowing you to utilize up to 25% for non-payroll related costs, but the whole point of this program is payroll. So you can use more than 75% on payroll, yes.
Okay.
All the questions we had.
We have 5 more minutes. It's 12:40, so any other questions before we wrap up? Or
there's one that just came in. Can you transfer funds from the PPP account to your main capital account for each expense, or do you need to have your payroll company switch pulling from the new account? It's an 8-week time period, and we are recommending that you switch your payroll, the account that it comes out of, for that 8-week time period. Some of our folks have said, it's not worth the cost and the time and the effort to do that. So I think it has to really, it's not a requirement. I think you have to use, whatever makes sense for you. But just keep in mind that when you apply to the lender, they may ask for bank statements of, to show, okay, here's the amount that was used from the PPP money, and here's the exact amount of my payroll, or so here's the debit out of my, checking account, and here's my backup health insurance bill. So just they may want additional. We don't know what all of the lenders going to ask for yet. We're just trying to be proactive and make it as easy as possible. And everybody's organized and around this, then it'll be much easier to gather the data when requesting forgiveness. So if you're 100% for payroll, you will be forgiven for 100. That's not 100% true. Keep in mind, you also have an FTE requirement and a requirement of 25% based off of Q1 of 2020. So, and you're also limited to $100,000 per person. So you do have to run all three. You have to ensure that you're using more than 75% for payroll, but also look at your head count and look at your, if you're paying certain individuals 25% less. So, if you were to cut your head count in half, but just start paying the remaining folks double what they were making, and you've spent 100% on payroll, you're still going to have a headcount reduction potential issue for forgiveness there. Self-employed is limited to $100,000 a year, or $833.33 a month. Self-employed individuals limited to $100,000 per year, which is actually limited to $15,385 for the 8-week time period. If headcount remains all okay, Lauren, then yeah, if you use 100% on payroll, headcount is fine, and your other calculations are fine, then yes, you would be forgiven. And that's, like I said, under current guidance. That's what we anticipate. If you have any questions, please feel free to reach out. The difference between the 333, so when everybody was calculating their loan amount, they calculated it based on months. So if you take $100,000 and divide it by months, divided by 12, it's $8,333 a month. For the forgiveness portion, it's based on weeks. So for the forgiveness portion, if you take $100,000, divide it by 52 weeks and multiply it by 8, you get $15,384. Okay. So if you have any questions, please feel free to reach out. Otherwise, thanks so much for spending your afternoon with me, and I hope you guys have a wonderful day. If you have any questions, let me know.
Fantastic. Thank you so much. I dropped your email and your website in the chat, just so everyone knows. I also dropped some links. Keep an eye on our Facebook and LinkedIn pages for upcoming webinars. Everyone have a great day, and I'll see you on the next webinar. Thank you so much.